Welcome to The Explainer. Today we're going to trace the line from a potential government shutdown in Washington, D.C., all the way to the future of technology across the globe. We're going to connect the dots between political risk, safe haven assets, and believe it or not, the high-stakes race for tech dominance.
And let's just start with this observation, because it really sets the stage. A single headline, a single post, can move billions of dollars in an instant. It just goes to show you we're living in this incredibly volatile, headline-driven world, which raises a huge question for anyone trying to make sense of it all.
So this is the big question, right? In a world that feels like it's just saturated with uncertainty, you've got trade tariffs, political drama, where are the real opportunities hiding? Well, our story today begins with the drama shaking the world's largest economy.
Okay, let's dive right in. The thing that's got markets so on edge right now is the looming threat of a U.S. government shutdown. Now, this isn't exactly new. It'd be the fourth one under this presidency, but its potential impact is still sending some serious shockwaves through the global economy.
So what's the holdup? Well, here's the core conflict. On one side, you've got Republicans pushing for a temporary funding bill, and they're threatening to furlough a ton of federal workers. On the other side, Democrats are digging in, fighting for healthcare subsidies. Both sides are completely entrenched, pointing fingers at each other as that deadline gets dangerously close.
And this isn't just some political show. A shutdown has very real, tangible consequences. We're talking hundreds of thousands of federal workers suddenly without a paycheck. Critical economic data we all rely on, like inflation numbers, gets delayed. And it can disrupt everything from national parks to, yes, even air travel. Bottom line, it just creates a whole lot of uncertainty for everyone.
So you get all this chaos in the world's biggest economy. And what happens? Investors do what they always do. They run for cover. But when the usual safe bets feel risky, where does all that money go?
Well, for many, the answer is an old friend, a classic safe haven asset that, in this chaotic environment, is suddenly shattering records.
Yep, gold. It just surged past the $3,000 mark. And this isn't just some minor bump. We're talking about a new record high. It's being driven by investors who are looking for a reliable shield from all this geopolitical and political risk. And get this. The momentum isn't expected to stop here. Some analysts are saying $4,000 by the end of the year is a very real possibility. Some are even throwing out numbers like $5,000 or even $6,000 for next year.
But here's what's really different this time. It's not just individual investors. We're talking about central banks, from China to Europe, buying gold in record amounts. They're not just treating it as a hedge against inflation anymore. They see it as a core, foundational asset for protection in an unstable world.
Okay, so if all this chaos is pushing money into safe havens like gold, the next logical question is, where on earth can you still find actual growth? And that search is leading a lot of people to one of the world's fastest-growing economies, India. But when you look at India, you see this central tension, this real push and pull. On one hand, you have these big external risks. We're talking U.S. tariffs, uncertainty around visas. But on the other hand, you've got these incredibly powerful domestic strengths, a booming consumer economy, low inflation, and a supportive government. It's this massive tug-of-war between global risks and local strengths.
So, what's the playbook here? Well, according to the experts, the smart move is to look inward, to sidestep those sectors that are vulnerable to global politics, and instead bet on the parts of the economy powered by India's own internal growth. We're talking infrastructure, financial services, and what's happening in the rural economy.
But India isn't the only game in town. There's another huge emerging market that's grabbing everyone's attention, and it presents this classic dilemma. China. Is it cheap enough to be worth the risk?
So, why even consider China right now? Well, it pretty much boils down to one word: valuation. If you look at its price-to-earnings ratio, it's sitting around 15. Compare that to the US or India, which are up around 24. Purely from a price tag perspective, the Chinese market looks comparatively cheap. But, and this is a big but, that value comes with a major catch. The opportunity is clear. China is pushing hard to be a leader in AI, and the government is providing support. The risk, however, is huge. You've got a property sector that's still a mess, and this constant deflationary pressure. Let's just say investing in China right now requires a strong stomach.
Okay, now let's pull back for a second and look at the real big picture here. Because there's one massive technological shift that's kind of underpinning this whole new era of global competition. And frankly, it's tying all of these different themes together.
The AI revolution, well, it runs on one thing above all else: electricity.
The demand from data centers is so mind-bogglingly huge that it's already caused wholesale electricity costs in parts of the US to skyrocket by 267% in just 2 years. I mean, just think about that number. That's a staggering increase.
And this is where it all comes full circle, right back to geopolitics. The logic is so simple you just can't ignore it. You can't have AI without massive computing power, and you can't have that compute without enormous, almost unimaginable amounts of energy. Suddenly, this isn't just a tech story anymore. It's about national power. Just look at the numbers. China is planning 150 new nuclear reactors. South Korea and Japan are pouring tens of billions into AI. This is the new global arms race.
And so, that's the provocative thought we'll leave you with. We started with a potential government shutdown in Washington, we followed the money to gold, we looked for growth in India and China, and it all leads here, to this new reality. The battle for the future might not be fought with soldiers, but with semiconductors and power plants. Is securing compute and energy the new definition of national security? It's a question that is absolutely going to define the world we live in for the next decade.